an 85% collapse, a $138.4 billion shift in foreign treasury holdings, and a trade dispute that may be reshaping far more than cross-border commerce. What started as a tariff battle between the United States and Canada is now influencing consumer behavior, investment decisions, and supply chains that support key industries, including automotive manufacturing. Could these be temporary disruptions, or the early signs of a much larger realignment? Your roadmap to the latest in auto? Welcome to Highway Herald. Today, we're breaking down the developments behind these headlines and exploring what they could mean for trade, investment, and the future of North America's industrial landscape. Here are the key developments. Number 5. How a consumer boycott turned into an economic earthquake. What makes this situation unusual is that consumers, not just governments, became a major force in the trade dispute. In Canada, American spirits exports plunged 85% in the second quarter of 2025, falling below $10 million as consumers increasingly chose domestic alternatives. Wine, beer, and liquor producers across the United States were similarly affected as provinces restricted U.S. products. Unlike tariffs, which raise costs, boycotts can eliminate demand entirely. American wineries and Kentucky bourbon producers felt the impact through weaker exports and growing uncertainty. The bigger concern is that Canadian brands are gaining loyal customers during this period. As automotive enthusiasts know, once buyers switch brands and find a better alternative, winning them back can be difficult. That same shift in loyalty is now occurring across national markets. But the boycott didn't remain confined to Canadian store shelves. What started as a domestic consumer reaction soon began influencing buying habits across parts of Europe as well. Number 4. How the boycott expanded beyond Canada. Anti-American consumer sentiment has expanded beyond Canada into parts of Europe. Surveys in Germany, France, and Denmark show some consumers are avoiding certain U.S. products, with brands such as Tesla, Coca-Cola, and McDonald's frequently mentioned. While most Europeans have not abandoned American goods entirely, the trend highlights growing reputational challenges for U.S. companies. Modern boycotts spread rapidly through social media, shopping apps, and retailer promotions of local alternatives. For global brands, political controversies can increasingly influence purchasing decisions far from their source. Goldman Sachs estimated that widespread foreign boycotts could reduce U.S. economic output by $28 billion to $83 billion. The automotive industry illustrates this risk as brand perception, trust, and international reputation are becoming nearly as important as technology, performance, and pricing. Yet consumer behavior rarely changes without an underlying cause. To understand why these boycotts gained momentum, we need to examine the political tensions that strained one of North America's most important economic relationships. Number 3. When political friction starts rewiring supply chains. For decades, the United States and Canada operated one of the world's most integrated economic partnerships, especially in industries such as automotive manufacturing, energy, metals, and agriculture. However, expanding tariffs and rising political tensions have placed that relationship under strain. Many Canadians viewed tariffs on vehicles, steel, and aluminum as a sign that economic ties were becoming politicized, influencing consumer and business behavior. The automotive industry highlights the challenge, as modern vehicles rely on complex, cross-border supply chains where parts often move between countries multiple times. Uncertainty can increase costs, delay investments, and eventually raise prices for consumers. More importantly, businesses may begin redesigning supply chains and sourcing strategies to reduce future risks. If uncertainty persists, those long-term changes could permanently reshape North American manufacturing networks. Before we get to the two developments that could have the biggest long-term consequences, take a second to subscribe to Highway Herald. We cover the stories where trade, industry, and the automotive world collide, and you won't want to miss what's coming next. And while major industries were adjusting supply chains, another trade dispute emerged over a product few expected. It may sound small, but its implications could extend far beyond grocery shelves. Number 2. The mushroom dispute with bigger trade implications. Although mushrooms may seem minor compared to vehicles, energy, or steel, a recent trade dispute could have broader implications. In May 2026, the U.S. Commerce Department imposed preliminary countervailing duties of 1.62% to 4.97% on fresh Canadian mushrooms, arguing that Canadian producers benefited from unfair government support or tax advantages. Canadian producers rejected the claim, noting that similar tax treatments exist in the United States. The significance lies in the precedent. If agricultural tax policies are treated as subsidies, other countries could use the same reasoning against American exports. That could affect a wide range of U.S. agricultural sectors, including grains, livestock, dairy, and processed foods. Ultimately, the debate is less about mushrooms and more about whether tax policy becomes a new front in global trade disputes. But the most consequential shift may not be happening in supermarkets, factories, or even at border crossings. It may be taking place in global capital markets, where investors are deciding where to place billions of dollars for the future. Number 1. Why investors are paying more attention to Canada. The final development involves shifting investment flows. Canada, long viewed as politically stable and resource-rich, is attracting growing attention from global investors. Foreign direct investment into Canada reached $96.8 billion in 2025, the highest level in nearly 20 years, with strong interest in energy, critical minerals, LNG, infrastructure, defense manufacturing, and industrial projects. At the same time, foreign holdings of U.S. Treasuries fell by $138.4 billion in March 2026, largely due to reductions by Japan and China. However, this does not signal an exodus from the United States, which continues to attract substantial investment into stocks, corporate bonds, and technology sectors. The broader trend is diversification rather than abandonment. For the automotive industry, where investment flows often determine future factories, battery plants, and supply chains, these shifts could have long-term significance. And when consumer behavior, trade policy, supply chains, agriculture, and investment flows all begin moving at the same time, the result is a story much larger than a simple tariff dispute. Verdict: a trade fight that grew into something far bigger. What began as a tariff dispute has evolved into a much broader discussion about consumer influence, economic trust, supply chain resilience, and global investment strategy. The reality is more nuanced than dramatic headlines suggest. The United States remains a dominant economic power and continues attracting enormous amounts of capital. Yet several trends deserve attention. Canadian consumers have altered purchasing habits. Boycott sentiment has appeared in parts of Europe. Trade disputes are expanding into new industries, and investors are increasingly exploring alternatives alongside traditional U.S. assets. The question now is whether these developments represent a temporary adjustment or the beginning of a longer-term shift. Before we wrap up, we'd love to hear your perspective. Do you think Canadian consumer boycotts will have lasting effects on American industries? Could Canada attract a larger share of global investment over the next decade? And what impact might these changes have on North America's automotive manufacturing sector and future vehicle production? Share your thoughts and experiences in the comments below. We always enjoy hearing from fellow enthusiasts and industry watchers. And if you enjoyed this analysis, be sure to subscribe to Highway Herald and turn on notifications so you don't miss our next vehicle update, industry report, and automotive deep dive. Thanks for watching, and we'll see you in the next one. You can now check out any of the videos on the screen. There's more exciting and informative content waiting for you.